Okay, people, get ready. Here we go. Yeah, I had this cool introduction for you here too. Okay, now I'm talking here now. That means you can't talk anymore. Okay. Okay, here we go. Hopefully everyone's got their popcorn, caffeine, bathroom breaks all out of the road, because we got Wayne, who we refer to him as ESP, and I'll let you infer that as you will, but that's what he's been called that ever since we were doing gaming many years ago. I've known this guy for like 40 plus years, so we had some early internet technology that we invented and patented in the US, and we had a whole lot of fun being a startup entrepreneurs in the internet era, and here we are now in cryptocurrency doing similar kind of stuff, and of course AI now, doing some cool stuff with AI now, and we hope to be maybe releasing some of that soon, but that's kind of fun. And so the presentation, Wayne's going to talk about dollar cost averaging, and I kind of touched on that for a few minutes, but basically that's like just making sure you put a few bucks in every month, or whatever you call a few bucks, and you do that over a course of time, and that ends up being very valuable. So without further ado, we'll let ESP or Wayne. Okay, man.
All right. So just before we start, Anna, my wife, just got back from Italy, and she was in a bar, and Roman came in and says, "I want 5 beer." Okay.
Stacy that one.
Yeah, she would like that one actually.
This was done in February for anyone who was here. I'm just going to go over it again because it's pretty important that we do this when we're buying cryptocurrency. Dollar cost averaging is buying small amounts or whatever you could afford over time. Usually, best way to do it is set a timer on your phone, do it every 2 weeks, every month, whatever the case may be. So, cost averaging is a practical approach to investing that involves constantly putting a fixed amount of money into an asset at regular intervals. The beauty of it is we're able to consistently buy Bitcoin or whatever currency that you're investing into and hanging on to it and just continually going forward with that. Now the advantage is we reduce the impact of short-term price. Cost averaging is a powerful investment strategy that offers multiple advantages to investors. Constantly investing fixed amounts at regular intervals, it naturally reduces the impact of short-term market fluctuations. So no matter if it's high or low, we're consistently buying a certain amount. In the presentation, I've got it fixed at a $250 investment.
How much was that? 250 you said?
$250
A month.
a month.
Okay.
And we'll show the results throughout the presentation.
You can add as many zeros on as you want.
Yeah, you get whatever it is you could afford. Quit a bad habit. Quit drinking scotch, and you'll have an extra $1,000 a month. Right?
You drink that much scotch?
Not anymore.
Not anymore.
Those choices are kind of made for you,
Yeah.
or not.
So we're going to run the examples from where the all-time high actually hit in October of 2021. And these are the prices from that point forward. So they've gone considerably down over that particular moment in time, all the way down to like 21,000 Canadian dollars from 85.
These are in Canadian dollars.
Yeah, this is in Canadian. Okay. So 85,500 was basically the all-time high just after the COVID era. The all-time high when this happened during this presentation was 16 months from February of this year, was 16 months ago from that date that we had the all-time high. Bitcoin, when I did the presentation, was trading at 33,200. So it was roughly 2.5 times below the all-time high. So during the all-time high, Bitcoin rose nearly 3 times in its value in 8 months, from 27,000 June 2021 to 85,000 October 2021. So that's the prior era of it increasing and then falling again. Trading volume went from 48 billion to over 54 billion. So the fear of missing out, basically FOMO, it's played a significant role in driving new investors to the Bitcoin market. As Bitcoin's price experienced dramatic surges, particularly during bull runs, many individuals felt the urge to buy. So a lot of people were buying during the high prices, getting all scared and selling during the low prices. We see that, well, we've seen it time and time again.
It happens every cycle.
So the historic examples for purchasing Bitcoin. Now this is during the all-time high era. I run a scenario. So examples of cost averaging during the all-time high period based on 8 months at $250, a total of $2,000 invested. So from the 8 months prior to the all-time high. So buying Bitcoin at the all-time high in a one-shot deal, you would have purchased 0.0233 of a Bitcoin. That's buying it one time, no cost averaging. Buying Bitcoin cost averaging over 8 months from March 2021 to its all-time high would have purchased 0.034 Bitcoin. And buying it after the all-time high period over 8 months, up to February of this year, you would net 0.04 Bitcoin.
More Bitcoin.
More Bitcoin. Because you're buying it on a downswing. So, as an overview, it shows that we've got 0.0233, buying it at one time at the highest, cost averaging before the highest price, 0.034, and then cost averaging it from the all-time high to February, you have 0.04 Bitcoin. So carrying through the investment prior to the all-time high and after would have cost 16 months or $4,000 and would give you 0.074 Bitcoin. Average price of Bitcoin over the period would have been $57.9, or 23% lower than the all-time high.
So that makes a huge difference.
Huge difference, for sure. And Bitcoin's fluctuation, as we've seen just recently, has been like, you could hit 10% in 2 days. Like, we went up 5% today.
And nobody can predict it.
And no one can predict it. So no matter how low it goes, this is actually an advantage for people who are into Bitcoin and cryptocurrencies because of the fluctuation. Our dollar is consistent, goes down all the time.
True enough.
So the conclusion, $2,000 at the all-time purchase of 0.0233, you would have 31.5% more Bitcoin in the up months, and on the down months, you'd have 42% more Bitcoin.
What do you mean by up months and down?
So you're cost averaging up, going to the all-time high in the 8 months leading up to the all-time high. So as you're buying, it's getting higher to buy, so you're buying less Bitcoin. And when you're cost averaging down, you're buying it as it's going lower.
And more Bitcoin.
Right. So Bitcoin hit an all-time high 16 months ago, and that was in February. Since that time, Bitcoin has lost nearly 3 times its value. During this period of 16 months, we would have been cost averaging down, as we just explained.
Again, not thinking about the value of Bitcoin, just buying on a regular.
Yeah, just buying it. I mean, what you end up having is if you put your 0.04 that you have in a wallet, and you leave that wallet, and you leave it 10 years from now, and you open up that wallet, you're going to have 0.04 Bitcoin. It's not going to change the amount of Bitcoin. All it's going to change is the amount of fiat currency you can get with that Bitcoin after the fact. Yeah. So no matter what, if you're continually buying little bits at a time, you're continually building up that wallet. Basically, purchasing Bitcoin for 16 months on its downward trend would have been a 32.5% loss in value if you had sold it at that time.
But we don't do that.
But we don't do that. So if Bitcoin was spent at a one-time all-time high, it would equal 0.049 Bitcoin, a current value of 1,600. So a 51% loss if you had bought it at the all-time high, and it averages its way down. Yep. So if Bitcoin was purchased from March 2021 to present, which was February, your gain would have been 11%, 5% per annum.
And that's going in the worst of the worst times.
Right. So purchasing Bitcoin for 60 months at 250 per month would have, on a five-year history, would have cost $15,000 and gained you 128% or 25.66% per year. So
that sounds pretty good.
Yeah, that's from the 5-year prior to all-time high.
No fiat investment can do that.
Fiat can definitely do that. Go down like that?
Oh, no. 28% gain.
There's no gain.
There's no gain. There's loss. Only loss.
Okay, so our conclusion on this. Cost averaging conditions us to commit to investing. And again, it's like set something up and just do it consistently. You're minimizing your long-term risk. The all-time low in this cycle was 21.8, and we're currently at 33.2. This was in February. So it was up 34% in 3 months. If the current cycle continues, we're cost averaging up, which is the cycle that ended up happening since then.
And we're at 62,000 US now.
Yeah. So again, just make a commitment to cost average. Slow and steady wins the race. Okay, now I put this in at the last meeting. So this was in March, February to March of 2024. And I just mentioned that to the people that were there, that if you had bought Bitcoin, $250 worth of Bitcoin, the previous month of the meeting, you would have gained 15% in that 1 month.
1 month. What would it be worth now?
Well, now we're going to go into a whole different thing.
Okay.
So we're going to eliminate the questions, and I added up 2 new slides here. So these are the prices now since February. So we hit another all-time high just after. So this is the real all-time high now at 95.4. So
until it gets to 95.4, don't sell.
Right. And then we started cost averaging down, but we're still within like a 10-point spread, which is not too bad. So basically, if you purchased $250 worth of Bitcoin last meeting, this 1 month gain would be 7.6%. So the recap of 8 months, $250 scenario. So basically, $2,000 bought 0.04 BTC. Your value of that would be now a 41.4% gain. And that doesn't include the last few months from February to now, cost averaging again. This just shows the original scenario that we did. And that's with $250. So again, whatever someone can afford, even if it's 100. Or
Just getting
quit going for coffee with your friends.
Quit drinking
Buy
alcohol.
goddamn Bitcoin.
Got them to buy.
I gave a lot of
For like
$5 bills away
$2,500 or more.
back in the early days.
I don't wake up.
I figure I gave away over $500,000.
Cash out or?
Seriously.
Nope, just me. Price.
That's what happened with
I
the
will
beer
get
fridge.
your phone and see.
$3 every time going in. And every week that we went to buy
You know,
beer,
I'm not even
we had more money.
knocking because having gotten out of that industry.
We bought beer and we still had more
It's
money.
required. They have to have a full staff of people keeping up.
Yeah, what a great fridge. When we cashed out, it was a third of a
Tough
Bitcoin.
business. It's tough business. Any cash business is pretty tough.
One
Think
third,
of,
yeah.
Sorry.
Staking.
Staking. Oh, okay.
Staking.
Stacking.
Okay.
I thought, oh, heard of that one. What's going on
Bitcoin's not really a stakeable commodity.
now? No.
But we do have a buddy of ours that does DeFi that loans his Bitcoin and buys other technology and stakes that technology and gains interest doing that. But this is risky, and I wouldn't recommend it to anyone who doesn't understand it. So now with that, you actually have to convert your Bitcoin to a wrapped Bitcoin, because it's not, Bitcoin runs on the Bitcoin blockchain. Ethereum is running all of the protocols, or most of them. So in order to use Bitcoin, you have to wrap it into a platform that's an ERC20. But that's, again, you don't have Bitcoin after that, after you do that. Well, they're still about the same price, roughly. Like within, identical? Okay, so it's an identical price. So technically you're able to reissue the wrapped Bitcoin for the Bitcoin after you're finished doing whatever it is you're doing on the PancakeSwap or other blockchain.
Okay, and so what is the risk then?
The platform.
Yeah, the risk is the platform and whatever you're using it
Oh,
for.
so the platform can crap out,
Well,
get stolen?
Yeah, it's still code.
It's not Bitcoin anymore.
Yeah.
It's a promise for Bitcoin.
Okay.
And whatever it is you're doing on that platform, that's also the risk. Whatever coins you're getting into that are collecting you interest. If you're loaning, like how that works, like the loaning, you could get liquidated. If you don't have enough Bitcoin backing that loan, as an example, Bitcoin goes from 80,000 today to 20,000. You have to have 4 times that Bitcoin on that platform, otherwise it gets liquidated.
Nothing.
If it goes up, you're okay. But if it goes down, you're running into a scenario. Like you could have one wallet, like a Trezor or whatever it is. And Trezors can be broken into several wallets. So that's not really an issue. But holding it in a Trezor is probably the safest route you have.
Well, just...
No more questions.
I thought I got in under the wire.
Go ahead.
Well, do we all have to run Excel spreadsheets to get this in our head? Because a lot of times you got to see it to believe it.
No, it's just a matter, you'll see it in your wallet.
Just buy Bitcoin.
Like if you're buying it and you buy $250 worth and you have 1,000, now you have $1,250 worth, it's not going to show you the dollar value.
Well, I know.
It's going to show you how much Bitcoin you have, and then it's going to show you a balance of what that Bitcoin's worth in today's market value. It's either going to be less than what you've originally put in, or it's going to be more than what you originally put in.
But the
Bitcoin's always going to be constant. Other than the buying part. If you're buying $250 worth of Bitcoin at 50,000 and you're buying it at 100,000, well, you're going to have 50% more Bitcoin buying it at 50 than you are at 100. And as it continually goes up, you're always going to be buying less and less and less and less Bitcoin for the same amount of money. But the value of it in the future should be more. The Trezor is beautiful in the ways that you could set it up. Like you could set up to 10 wallets on one account, right? So you could use it for grandkids, children, like household expenses, whatever you want, and set up each, and have a cost averaging wallet if you want. And I mean, even gold has hit an all-time high recently. So when it went up, I ended up selling what I had in gold and bought Bitcoin. Because gold is always going to just be that little bit of a plateau up. But it's on an upward scale as well, because our money's worth less and less every day.
That's the thing, it's not really real anymore, it's artificial.
It is. So even the price of the all-time high of gold when I sold it and bought Bitcoin, I have more value in the Bitcoin right now than I had in the gold. And that's not that long ago. Just for argument's sake, you have 10 Bitcoin on a Trezor, and you have a couple of kilos of gold. They confiscate both. You still have 10 Bitcoin. Unless they have the keys to that Trezor, they can't get in. But the gold that they confiscate, that's gone.
Fantastic job, Wayne. Yeah, very good. Good job, man. Okay, now I'm going to turn off all the mics so you can hear the real stuff.
Heckle of an hour.